Hey everybody, welcome back to the channel. Today we are talking about if Palantir has the potential to have a short squeeze. Now, a new article just came out on Seeking Alpha, and Seeking Alpha is known for some hit or miss articles. We're reacting to one of the better articles, not only because it's more bullish on Palantir, but rather because they're using some numbers, they're trying to give some analysis, trying to give some facts, they're actually doing a macroeconomic level analysis. So we're going to go through this article today. Now, first of all, my top level thoughts, if you don't want to watch anything else in the video, if you just want to know the answer to the title of this video, no, I don't think there is going to be a massive AMC short seller level squeeze, primarily because there's just too many shares. There's just way too many shares. We have 2 billion shares outstanding. To have a short squeeze, you need a low float, which is the number of outstanding shares in a company. And like for that level of AMC GameStop thing to happen, there has to be a massive short interest, which Palantir has a decent short interest, but it's not to that level. And there has to be not only a community that's just ready to take over, which, I mean, this article gets into, but I don't think Palantir has that type of a community yet. Also, I don't think there is a motive to have that type of community yet because it's a growing company that's like not a meme stock. It's like actually producing, revenues, and there's actually going to be growth, and there's actually potential to change the entire world. So you kind of don't want it to be like an AMC meme stock because that comes and goes, and it's probably not going to be anything substantial. And then on top of that, you just don't have enough people interested in the stock to buy that many shares in order for the shorts to have to cover to cause the squeeze. For those who don't know what shorting a stock is, in its most basic terms, you make money when the stock goes down, right? So you are betting against the stock price going up, and as it goes down, you profit on its going down. That's like the most TLDR version of what shorting a stock means. So if the price goes up while you're shorting a stock, you get squeezed because you have to cover your short position, meaning you have to buy the shares that you were you were shorting in order for you to not lose as much money as the price keeps going up and up and up, because the more the stock price goes up and the more you're short, the more you're screwed, right? If you're short and the stock price goes down, you make more money off the trade. So at that point, shorting a stock is very hard to do or very scary to do if the stock price were to go up, but it's very easy to do if you can predict it going down consistently. The problem is predicting it going down easily. Now, squeezes happen when there's a big short position and you have to cover your stock. So with AMC and GameStop, what happened in February is there was so much pressure shorting the stock, and there was so many people buying the stock, which means those shorts had to cover their shorts, which led to the price having these exponential crazy gains. And some of them, and GameStop went from like 20 to 350 at its highs, and now it's at, I think, at like 100 or something, 120. So it's maintained some of that value, but it still came crashing down. Same thing with AMC, went to like 67, now it's at like 20, but it was at $4, right? So those things happen. It's just they don't happen to every stock, and you kind of don't want them to happen to every stock because you want a stock that actually has the potential to like become a big company and not just get squeezed out. But there's an interesting point brought up in the article, so we'll get into the article. The core thesis of the article is if management decided to buy back their shares, and a buyback of your shares means that your company wakes up one day and you're like, hey, let's buy up a bunch of shares because we think our stock price is undervalued, so we're going to buy the shares, and if the stock price goes up, the company makes a lot of money off that because they bought it while the price was undervalued. Facebook just announced $70 billion buyback of their shares because they think they're undervalued. Now, Palantir could do this. I don't think they're going to do this, but you never know, right? Like, you never know if they did this. So that's the thesis for the article. If they were to do this, this is what would cause the short squeeze. I don't think that's going to happen. I don't think enough attention is on the stock from retail to actually be able to squeeze it. So ultimately, I don't think that's going to happen. But let's get into the article. Let's see what points are trying to be made. Okay, so if we look into the article right here, they say S&P reports that 102 million shares of Palantir are sold short. This is almost 3 times the average daily volume on a stock that once rallied 176% in 3 weeks. So the stock price did go up 176% in 3 weeks, and 3 times the average daily volume of that is being shorted. Palantir shorts are playing a dangerous game, shorting a company that has $2.5 billion in cash, positive operational cash flow, minimal debt, we have no debt, and only 78% float, all amid impressive revenue growth because we are growing our revenues 30% year after year. So his argument is a simple buyback announcement might be enough to trigger a short squeeze of epic proportions. The same is true for another Reddit rebellion or StockTwits spanking. By the way, who's on StockTwits? StockTwits is it's like Twitter for stocks. It's like you take Twitter and like all the stuff people talk about Twitter, and you limit it just to stocks, and you have StockTwits. I'm on Twitter at @AmitIsInvesting. I just mainly tweet, don't go on StockTwits, but let me know if you guys are on StockTwits. So let's go to a couple of the points that he makes in this article. He talks a little bit about the great rotation. I think this was actually a really good article because he was talking about like what's happening in the macro economy and how like growth, the rotation from value to growth isn't really happening, because like it's just like it's almost like a head fake because every time this happens, it goes right back to growth. So it's actually a good article. I'll leave it in the description. But some of the stuff on the shorting of the stock. So let's go a little bit further down here. So here, Palantir short squeeze is 102 million shares, equivalent to almost 3 times the typical daily volume. To put it in perspective, this is nearly 2 times the CEO Alex Karp's own personal holdings in the company. This is close to 3 times the entire ARK Innovation Fund Palantir position, the next largest holder behind Alex Karp. So he's just stating that the level of share interest is pretty heavy, not epically heavy, but it's decently heavy given the amount of shares that Alex Karp has and given the amount of shares that ARK Innovation has. The pace of the short selling has been so frenzied that it has made up significant portions of recent volume. If Palantir shareholders are entrenched long-term investors at this point, who exactly are they planning to buy back share from? So he argues that it is dangerous and foolish to short a company that has $2.5 billion in cash and no debt, alongside $263 million in long-term leases. Last 12 months operational cash flows were $222 million, up from negative $296 million in 2020, and only 78% of the shares are floated. Palantir's management could simply wake up tomorrow, decide that their stock is too cheap at this price, and announce a $1 billion buyback. And if they do that, that would be epic and it would be amazing. Now they have $2.5 billion in cash. They're probably not going to spend $1 billion on a buyback because they probably just think like the market's going to do whatever. And management doesn't care that much about the stock price. If they genuinely care that much about the stock price, they would do it. But, Karp has been he's very active on interviews saying like he just doesn't care. He wants to keep building the company. So it's likely not going to happen, right? And the article references that though we have praised Palantir's strategy of investing in startups, it would be very tempting to do so at this price. Now, so Palantir, right, there is a world in which they may take another $200 million, like they've already put $226 million in their SPACs, and invest in more SPACs. And that would be phenomenal, I think, in my opinion, because if you're betting on the potential of those companies, that would be great. But if you take that money instead and just buy back your own shares, that would also be great for shareholders, right? Because you would reduce you would reduce the dilution as well. So like that would be an interesting thing. I don't think that's going to happen, but it could be interesting. It's interesting to hear his argument. Depending on how aggressive they decided to repurchase, it could be catastrophic for the shorts. Experienced traders know that even the announcement of a buyback is a reason to sweat. Shorting a company that can fight back is like a roach motel, easy to get in, difficult to get out. A 1982 SEC ruling opened the door for tactical buybacks, and companies have used them to obliterate short positions ever since. So this was an SEC ruling in 1982 that basically said companies are allowed, if they realize the short interest on their stocks is heavy, to do tactical buybacks, because shorting is obviously like not the best thing in the world for people to do to a company, because they're trying to like break the company down, right? They're trying to make the stock price go lower, which is bad for shareholders. So the SEC said the company could recognize if this was happening and do a tactical buyback and actually buy back their shares. And here's an article right here. SEC admits it's not monitoring stock buybacks to prevent market manipulation. So the Securities and Exchange Commission has admitted that it has no ability to enforce the main rule intended to prevent market manipulation when companies buy back their own stock, and has no intention to do so. So at that point, they said, you know what, if you want to buy back your stock, you can just go buy back your stock. It doesn't matter. As an alternative catalyst for a short squeeze, and this is an interesting part, Palantir is a popular stock in the Reddit community that orchestrated the hilarious GameStop short squeeze. Now, this community is Wall Street Bets, obviously. They boast 11.5 million people on Reddit, and Palantir is so heavily shorted that it would be like each of them shorting 9 shares. Imagine what would happen if each of them bought 9 shares for 100, or it would go to $135 instead. That's really interesting, and that's sort of the key of the article. Last thing I want to read is the Snowflake, and then we'll analyze a couple parts. To give an idea of how brazen the shorting of Palantir is, compare Palantir to Snowflake. Both are high-growth software businesses with strong balance sheets. Both get compared to each other often. And after reaching an intraday high of $402 a share, Snowflake had a drawdown of over 50%, but has since rebounded 52% from its low of $120. Palantir has revenues of $400 million higher than Snowflake and generated $171 million more in operational cash flows, and is still being shorted even more than Snowflake. So a couple of interesting points here. The only way this happens is if management decides to have a buyback. That's probably not going to happen given they want to keep their cash flows, and it just doesn't seem like something Palantir would do because they don't care about the stock price in the short term. Or there would have to be like a Wall Street Bets level rally. Now, and this is kind of where I wanted to conclude the conversation here. Could Palantir have a Wall Street Bets level rally? I think it's possible. Like, I truly do think it's possible. I don't think it's going to happen, and I don't think, YouTube is going to be the catalyst for this to happen. I think there has to be like a cultural phenomenon to have a Wall Street Bets level rally. Like when the GameStop AMC thing happened, there was the pandemic that was going on. There was external factors. There was Citadel and Point72. People didn't like the hedge funds. Like, there's no hedge funds actively shorting Palantir to the point where you like hate the hedge funds, right? There's just, obviously there's hedge funds and institutions shorting it because you need that type of capital to short it, but it's not like this animosity that you have towards those people. So because of that, I don't think there's going to be like a massive level of like retail up and coming to go after these shorts and like prove them something's wrong, because there's also not a cultural narrative between Palantir as a company, right? AMC, the whole movie theaters workers getting decimated by COVID, there was this large argument that like these people don't deserve to lose their jobs. This company AMC does not deserve to go out of business because of something that was out of their control. Movie theaters are a great thing for society. So like we should kind of like defend the rights of the average working class person who wants to just go into a movie theater by, you know, defending the stock and squeezing the stock. And, you know, there's like a narrative there. Same thing with GameStop to some extent, even though, you know, GameStop is kind of pointless to me just as a company. They don't really do much. And this NFT marketplace thing that they're trying to go for, interesting. I mean, it's interesting. It's a plan, but I don't know if that plan's going to work. Palantir doesn't really have that type of relationship, right? I think if Palantir were to rally, let's say Palantir is up like 300%. So what, we're at $14. So that would be 50, 14 times 3, 52. Yeah, 52, right? 4 times 3 is 2, carry the 1. No, $42. Wow, that's my bad math for it. So 14 times 3, let's say we're up at $42 or something over the next like 6 months. I think then there is momentum because so many people would be interested in the company if it were to rally 300% in the next couple months, that there's a world in which Wall Street bets can make this stock like a darling stock. The question then becomes, is there enough short interest happening at the same time as well for Wall Street bets to also feel like we're rallying and we should go back against the shorts? The problem is if there's that much short interest, it's going to be harder to rally. And the other problem is getting people's attention for them to feel like it's a darling stock if it's not rallying. So like we're in a catch-22. It has to rally for people to get their attention, or it has to be massively shorted in order for people to get their attention. But if it's massively shorted, it's not going to rally. So then what's sort of going to be the catalyst for why we should short it? Unless there's just like some random thing that happens in Wall Street bets that says, look at all the short interest, we should like do something about it, which is kind of what happened with AMC and GameStop. I don't think that's going to happen for Palantir. And I don't think the buyback is going to happen. So, you know, overall, it's an interesting thought experiment. If it does happen, I would be pretty happy. I think a lot of us would be pretty happy. It would be pretty cool. But I think to conclude, we probably should value the fact that Palantir is a growing company. It is going to grow over time, and it is going to take time to grow. And we have to be patient. We have to execute. We have to see how the execution happens. And it's fun covering, you know, especially for me as this channel, the day-to-day operations of this company. Because, you know, I was reading the stat the other day that most Wall Street analysts only cover like 3 to 4 stocks. Like it is very difficult to cover multiple stocks if you're just in the stock world, right? Like to have an opinion on like 17 stocks, it's like you don't have an opinion at that point because I don't trust someone who's done the research on 17 stocks because where do you find the time in the day to research 17 stocks? And it's like maybe that could be your full-time job. Sure. You still probably haven't done the depth of analysis from a numerical perspective and from a cultural perspective to understand a company if you're doing 17 of them. So, you know, covering a couple of them is really what matters. And it's fun covering Palantir because there's more and more stuff every day to sort of understand and dissect and see what happens. And that means it's growing. All the partnerships that I've been doing videos on, all the product offerings that have been coming out, the stock price is detached from what's going on because what they're doing is some really amazing stuff. And the fact that they're doing this stuff and they're like really trying to get themselves out there into the world and establish themselves means that we should value them not being a meme stock and just value them growing as a company, because that's going to be ultimately what leads to a real long-term gain. 5-6 years from now when we're looking back at these prices at $14 and just laughing about it. So yeah, those are my thoughts. Let me know what you guys think. Do you think there's a short squeeze possible for Palantir? And if not, are you happy that it's not a meme stock or a meme stock? It is a meme stock because it has been very mean to us over the past couple of days, past couple of weeks, past couple of months, but I'm happy. I'd rather have it be a meme stock versus a meme stock. So thank you guys for watching. Let me know your comments. My name is Mitt. I'll see you in the next one.